Good morning. My name is Mike Ralston. I'm the CEO of Blencowe Resources, BRES, and I'm here to talk to you today about the Orum Cross graphite project that we're developing in Uganda. This is a substantial graphite project, and as you can see, we believe that we are highly leveraged into the fast-growing electric vehicle market moving forward. What's the value proposition for Blencowe? We are developing a world-class graphite deposit. How do we denote world-class? The size and scale of this project is immense. There's an estimated 2 to 3 billion tons of graphite, of which we've drilled out the first 13 years of mine life over 2 drill programs in the last 18 months to a JORC standard, which is where we've got our preliminary economic assessment from. The quality of the end product in graphite is very important. What the purity of the concentrate looks like can not only achieve you better sale prices, but also better demand for your product. We are lucky that our end product of concentrate goes to a 97 to 98% purity with low impurities and high recoveries. And added to that, a good mix of jumbo and large flakes in the mix as well. So a very good end product. We believe that Uganda is one of the safest locations to be developing a resource project in Africa. My background is African. I'm born and bred in Zimbabwe. I've spent a lot of time in Kenya and East Africa, and I know Uganda well. It's a safe location. There's a strong government there that supports mining projects, and we believe it's a great destination to be developing a project that will go on for a very, very long time. It's an advanced project. Orum Cross already has a 21-year mining license awarded. That was awarded in 2019. Prior to us acquiring the project from the people that we got it from, and we've now moved through what I call the JORC exploration phase, where we're doing JORC standard drilling, and we're now moving into the feasibility studies phase going forward. And we've already completed our first internal commercial study, that is the PEA, which provides some exceptional numbers, which I'll go through in a minute. And finally, we've got huge leverage into this battery metals market. We understand that the electric vehicle market is going to grow substantially over the next 5, 10, 20 years. All of those electric vehicles are going to require lithium-ion batteries, and graphite is a key component of the anode, which makes up the lithium-ion battery. So as electric vehicle growth expands, so will the battery growth, and so will graphite demand. This slide shows you where our project is. Uganda is a landlocked country just to the west of Kenya, but in East Africa. Our project is in the northeast of the country. You can get there by sealed roads all the way up to Kitgum, which is just about 90 kilometers to the west, and then by a dirt road, which is in good condition, and we're hoping will be tarred by the time we get into production. It's a great location in that there's plenty of infrastructure in place, not just the roads that I'm talking about, but there's also electricity, which comes almost to the gate or to the mine gate, and there's plenty of water as well. So the key infrastructure requirements for the project are there. Very importantly, the project is shallow. It's going to be an open pit deposit with free digging, and thus we're achieving some of the lowest operating costs amongst our peers in the graphite space. And as I said before, it contains a large component of these scarce jumbo and large flakes, which we'll talk about in a minute when I get to that slide, but they produce a higher selling price and therefore will give us an overall weighted average price which is higher than many of our peers. This is what we've done to date. We acquired the project about 18 months ago in April 2020. We got a 21-year mining license with the project. We moved very quickly to our first drilling program to delineate a JORC resource. We completed that in the second half of last year, 22,000 meters, 65 holes. And in the early part of this year, in April, we announced our first JORC standard resource for Orum Cross. However, we needed to do some further infill drilling to upgrade a decent portion of that JORC resource to an indicated and measured category so that we could use that for our pre-feasibility study coming up. and we completed a further 74 holes for 2,200 meters diamond drilling in July this year. That program has completed, the samples have been prepped, and they're now in Perth awaiting assay work. And once they're assayed, we'll be looking to get an upgrade and an updated JORC resource, certainly before the end of this calendar year. And finally, we've completed our first run of metallurgical test work in the SGS laboratories in Toronto. Very, very important to understand what your end product looks like for graphite. As I said before, the concentration purity is very important. So we've done that work and it's come out very successfully. And finally, we've just completed our preliminary economic assessment, which is what we'll go through now. The PEA is an internal study. It needs to be pointed out that this study was not signed off by third parties. However, each and every component within it has come from third-party work that we've done, whether it's drilling via our drilling partners, whether it's laboratory test work, met test work done by Canadian partners at SGS, etc. But it's been compiled by the internal management team, and it was compiled for us to have an overall view of the project for the first time, to understand what the key metrics look like in terms of what it can do in this initial 13 years of mine life. We have estimated an average annual production tonnage to be delivered of 75,000 tons per annum of concentrate. That's a large quantity, and it's one that we're going to have to work through with offtake partners as we start to engage with them going forward. But at this stage, we didn't set what we could sell as a limitation on the project. We decided that we'd produce as much as we could within the overall confines of what the mine itself would produce. So 75,000 tons per annum, and the capital expenditure to deliver this project, most of it being the plant, but some of it being infrastructure, is $80 million US. So we've assumed a 65% debt, 35% equity to fund that. But that capital expenditure number is not considered particularly high. It's definitely considered doable. And in relation to some of our peers, it's quite low. So we believe that this project can deliver considerable quantities of high grade and high value graphite from what is a relatively modest capex upfront. And the payback on that capital being just 4 years. In fact, it's probably more like 3 years, but we're being a little bit conservative in terms of trying to keep cash within the business in those first years. The weighted average selling price of our basket of 4 goods is $1,050 US, and we've got an operating cost of just under $500 US. So a significant margin, and that margin, based on the amount of tonnage that we're going to be producing as average, will deliver an EBITDA of around $40 million US per annum, which delivers about $350 million US over the cumulative cash over the life of mine. And that is after tax, after royalties, after everything else. So a significant return on investment, which yields a net present value of $317 million US and a very, very healthy IRR of 49%. Those are great project key KPIs. And I think that we're very, very excited about what we can deliver here. The next step will be to go forward into a PFS and go through each and every line item within this and ensure that the everything that's going into it and everything that's being pulled out is obviously taken to another degree of sophistication, of level of what we can see and what we can deliver. The JORC mineral resource at this stage, we've delivered in our first maiden JORC resource 16 million tons at 6% graphite. We expect that once we get the assays completed and get our second or updated JORC resource coming through, we will have over 20 million tons, and we're hoping that, and we're expecting to see that grade will rise to somewhere between 7 and 8%. So we've got a great project in the ground, but as I said before, it's shallow. It's free dig, so it's very easy and very cost effective to get out. And very importantly, it's open both along strike and at depth. So if we want to upgrade and upscale production at any stage, we can just drill more and we can just produce more. So the amount that the market can take in terms of sale of product is what determines the size and scale of this project, not how much can be mined. And that's very important going forward, because as we'll see later, the demand curves start to outstrip supply in graphite in terms of forecasts and expectations going forward, which means that Orum Cross could essentially grow to a much larger graphite project going forward over time. The metallurgy is exceptional. Not only the concentrate grades, somewhere between 97, 98%, but also the recoveries. And what we're most likely to deliver into the plant will be a composite, which will be a mix of the Northern Syncline and Camp Lode deposits. And we're seeing a 97.3% concentrate with a 90% recovery. Exceptional results, and we're very happy with that. This is what's happening in terms of graphite demand and supply going forward. The source of this particular slide is Benchmark Minerals Intelligence, one of the principal analysts and market research specialists in graphite. And BMI are essentially saying that with all of the existing and probable and possible tons going forward for graphite around the world, there's still going to be a widening of the demand curve against the supply from about 2025 onwards. That green line shows the demand, and as you can see, around about 2030 onwards, it just starts to grow exponentially, mainly due to the requirement for graphite within the lithium-ion batteries as the EV exponential growth starts to really kick in. And as this does happen, whether or not it's at this extent or slightly flatter or slightly higher demand curve, there is going to be a shortage of graphite. And those projects that are into production, those projects that are consistently delivering a high quality end product, and those projects that have the ability to upscale to meet a higher demand will be very valuable. And that's what we've got here at Orum Cross. We are, as you can see from this graph, we're looking to go into production around 2025, which is exactly when the demand supply imbalance starts to occur. And that's going to be a very, very good time to be in this particular space and in this particular commodity. This is what we believe the market prices will look like in 2025 when we go into first production. Graphite prices are fairly opaque, quite difficult to get a very good understanding of what they are at the moment and what they will be going forward. So we've assembled this using information from UBS's battery raw metals report and through Benchmark Minerals Intelligence, and discussed this with them at length to try and understand and ensure that the prices that we're using are relevant and, very importantly, are conservative. We don't want to charge in and be very over the top in terms of pricing and find out later that it's the prices are lower, and we're obviously going to have a big problem within our financial forecast. So we've been relatively conservative. As you can see from this, the jumbo flakes today selling around $1,250 per ton for a 94% concentrate, or a 97% today around $1,400 per ton. Fast forward 4 or 5 years to go to 2025, and the expectation is $1,650. Large flakes, again, moving from $850 up to $1,000 from a 94 to 97%, and forecast to go to $1,250. Medium from $700 up to $1,000, and small flakes from $600 up to $750. And if you take the percentages within our basket of end product, as you can see in the middle column there, you'll see that the majority is the medium and small flakes. And with that in mind, the overall basket, the weighted average price for the overall basket of end products that we will be producing, taking into account the percentages, is $1,050. This is using CIF China prices. European prices are slightly higher, so that does provide some upside potential. And I think that we can, as I say, do a little bit more work on this and find our way to pricing that's going to be a bit more relevant within the pre-feasibility study going forward. The next phase for Blencowe within this PFS is to move through our marketing consultants that we've engaged with to understand the market a little bit better, understand the parties that will be buying our products. We will then make contact and obviously start that relationship, send them samples, and start to discuss products and pricing going forward. So there's going to be a lot more interaction with the end users going forward, and we'll start to assemble a market price data like we've got here, but based on direct information from end users. This slide just gives the listener, the reader, some idea of all the different applications for flake graphite. Moving from on the left-hand side, the jumbo and large flakes used typically for thermal sheets, lining steel foundries, and the majority of flake graphite is used for that in today's market, around about 1 million tons per annum at the moment, of which about 700,000 tons is used in that particular area. But as we move across into the medium and small flake sizes, we're seeing the lithium-ion batteries for use in EVs. Excuse me. And that's where we're going to see most of the growth going forward. So at the moment, that 1 million tons per annum for all flake graphite is forecast to rise to around about 4 to 5 million tons by 2030. And most of that growth is going to be in that medium and small space for the batteries. And as I said before, this is where we've gone. This is where what we've achieved over the last 18 months. Our management team has worked very, very hard, obviously within a COVID environment, to deliver not only 2 JORC resource drilling programs, but also some significant metallurgical test work as well. And we've just completed our first PEA, preliminary economic assessment. And now we're going to be moving very quickly in Q4 into the PFS. I just want to touch on the ESG compliance, because I think that's very important for some people and certainly very important for us. We've taken these responsibilities very seriously. We've got community welfare agreements already in place. We've paid nearly $200,000 US already as a preliminary payment to the community, and they've used that for a lot of agricultural equipment and implementation of better practices. We've got an educational fund working through at the moment, which will be helping people in the community. And moving on to the environmental, we'll definitely be using renewable energy, and we obviously want to make sure that we keep as carbon neutral a footprint as possible. And I think it's something that's going to be very, very more important as we go forward. The corporate overview for Blencowe, it's still a relatively low market cap, around £7 million today, 120 million shares. We've got significant shareholder being the vendor that we bought the project from, and we will manage that vendor in the sense whenever they want to sell, they will be selling through the company, so we will find buyers. There's not going to be an influx of those shares hitting the screen at any stage. Board and management hold a significant stake, and we're all long-term holders of it. And I think that that's probably true of most of the shareholders on the register, that we've got some good long-term holders that believe in where this project's going to go. They can see where other significant graphite projects on the UK exchange, such as Tirupati and Armadale Capital, have gone, and can follow what we're doing here and see that we're going to be able to deliver something very similar going forward. We've just obviously got to keep ticking the boxes, keep those milestones rolling over, and make sure that we can continue to deliver as we have done in the past today. We've also got outstanding warrants in there, around about 6 to 7p as an average price, which will provide further cash going forward if all are exercised. I just want to note that pre-feasibility studies that we're moving into will be a relatively low-cost exercise. We're estimating somewhere in the region of around about £1 million to deliver that. So it's not as if we've got some huge substantial capital raising to come. I think that we're pretty well managed with what we've got. We keep a tight ship, and as I said, we'll be continuing to deliver on those milestones and continue to show what a great project this is going forward. We've got a good team, lots of experience there. I've taken a couple of projects into production in the past. Alex Passmore's got exceptional geological experience, good corporate experience there as well. So we know what to do. We've done it before. We've raised money before. And I've got some excellent key management and advisors working with us as well. Our COO has got significant African experience developing projects through feasibility stage. And again, we've got great experience through the technical support from Minrom in South Africa as well. So we've got a good team. And the appendix, I think I will just leave out for now, because I want to take you back to that original slide and just leave you with just a couple of words in terms of the KPIs based on this this exceptional preliminary economic assessment that we've just pulled out. The size and scale of what we're proposing to deliver here at Orum Cross is world class. There are only a handful of graphite projects in the world that will be delivering at this level or above it. Certainly our operating costs are at the low end of the scale, and so are our capital costs to get this into production. We're extremely lucky in that we've got a project that's very shallow. We're in a country that's pretty low cost in terms of overall mining costs. So we have got a project that works in terms of the cost side of it. At the same time, because we've got a high purity of concentrate, and we've also got a significant basket of quality flake sizes, in particular jumbo and large, we are able to achieve a high weighted average selling price in order to get ourselves a great margin. So this is what really matters in terms of the overall project. At the end of the day, these are the numbers that we're driving towards. And I'm absolutely convinced that as we deliver a longer mine life, because this will ultimately be producing graphite at Orum Cross for somewhere in the region of 50 to 100 years. So we're only talking about an initial 13-year mine life at this stage. Once we add further mine life into this project, that NPV and that IRR are going to go up significantly. So I will leave it at that. I will thank you for listening and for your attendance. And obviously, I would ask you to please keep watching. BRES is our ticker. Keep watching and keep following us. And let's see where this can go, because it's got an exciting potential ahead. Thank you very much.